There we go. Okay, we got this next video now. Good morning, family. Good morning. Come on, everybody's in the party mode. We got the party music. Oh no, it's not on right now. I forgot. Wait a second. There we go. That'll liven up the spirits. That'll wake everybody up. We need everybody up. It's about to get fun. Remember, you're looking instantly at calls for this to fill the gap on SPY. If this thing starts crashing out the sky here, it's going to make my day. If it hits 585, I might have to just run through the wall. Remember, that's exactly what we need here. We said about 2 weeks ago SPY was going to run up to 590, then 600, potentially 607, 608. After it hit 607, we said we wanted to see the SPY drop right back down to 585. I'll show you the chart in which we made the note. After it drops down to 585, we said that it was going to then run up to 630. So far, so good. Let's see if this is going to continue to be correct. That's really what I want to see here. So I'll show you the chart in which we made that prediction. It is... Where is it? Oh, there it is. So as you all can see, look at the blue note right here. Last target of the range is met. We fall right back down to 585. Hit King's Point. We run right back up to 630s. So we'll see if this is going to happen now. Again, what I could see is the market filling this gap and then wanting to crash back down to fill the next gap, which is the one below you. Remember, you still have a gap below you from this day over here that you have not filled yet. So I want to see if you're going to start filling that gap soon, which again would be a drop from 585. Or no, 580. I have no idea actually. Where is it? It's like 580, 589. I'm on the 1 hour, so it's going to be a little off. 589 to around 585. So if we slip below 589, there's a very good chance you're going to fill that other gap right here. And I'm assuming it wants to fill that gap first before it wants to fill this gap. That's what I would assume, right? In terms of a probability type of a directional thing. But you just got to be careful here. If you're not going to sell the puts, I would just reposition into another set of calls. And just make sure I have some time to it. Just in case the jump doesn't happen today. You have at least, 3 days, 5 days, 10 days of time. They actually have a motorcycle ad. I was just like, what is that noise? Hey, what's going on? This is excellent. Okay, so boom, we got the top. We got the puts up here. It worked out perfectly. We're going to get the calls here. A cheap set of calls. And then if this continues to head lower, like we said before, Anywhere below 593, this is going to fall potentially to 589. Anywhere below 589, 588, you're going to fill the gap to 584. So there's a very good chance, again, you continue to head down another $6, $7 today. But there's also a really good chance that you fill the gap to the top. So what I want everybody to do here is, 1, supply and demand zones. When it gets above a certain color, we're going to play the calls. When it gets below a certain color, we're going to play the puts. When it's in the orange colors, we're going to play the 0 days, right? Remember, the way you play a 0 day put or a 0 day call, whenever you're looking at my charts and you're looking at this chart specifically. Oh, wait. I have no idea which chart it is. This one? Yes, this one. Okay, so whenever you're looking at this chart here, it's just the colors. That's it. You just got to look at it like that. So point blank, what I want to see happen here is you fall to at least 591. Once you fall to 591, we could see if this is going to potentially hold to run right back up to the yellow again, to then run up higher, where we can then get another set of calls at the yellow, right? For this to run up to potentially, you know, the orange one right here, right before the purple. Because the way we play calls is color to either the orange before the main color. So look, this is purple, right? You buy a call right here at the yellow. You're going to sell it before it hits the purple. You're going to sell it every single time, one before the color that you're playing for. Does that make sense? That way you have enough time to reposition into the downside by the time it hits the purple. If you're waiting for it to hit the purple and then you're waiting to sell it, by the time you get into the puts, you're not going to have a good entry. So this way, you can at least play both sides. And because of your understanding and your knowledge of being able to play both sides, you're going to end up profiting more. That's the idea. And if you could do this in a certain type of manner, let me tell ya, you could easily turn $50 into $150 with just one day trade. And that $150, you put that into, let's just say, $30 options that end up flipping the other direction. So one direction, one way, let's just say you go up 200%. The next direction, you're going to go up once again 200 to 300%, depending on how far it is and how quick it is. And if you think about it, that would mean that what do you call it? The $50 would turn into around 200, right? Or, you know, 150, let's just say, because 200%. And you get another 200% gain on 150, and boom, you know, you're already out 450 from $50, almost 1,000% within 2 trades, which is kind of crazy, you know, that you could be up almost 1,000% within two trades, as long as you just predict both directions correctly. And remember, today's Monday. Mondays are usually V-shaped type of days, right? The same thing with Tuesdays. So I want to see if the first leg is going to be straight down. I want to see if this is going to go down more. After that, I want to see if this is going to get picked up and sent up to either the yellow or the purple after it drops from this area. I just need this to drop below 590. If this does not drop below 590, there's a good chance you might actually hold this and continue to go up higher. So you got to watch that 590 level. $592, $593, yeah. As long as we don't get above $593, this is going to be really fun. And if you're trying to play some zero-day calls or puts, recognize that as you're playing these calls and puts, the one thing you want to do is make sure you're not getting strike prices too far out, please. And if the strike prices are too expensive, because I'm looking at them right now, I'm not even going to lie to you, these things are going to be through the roof. I'm almost 1,000% sure. The first thing I'm going to do is actually log in with this so I can sell the SPY trade. And then we're going to reposition to something else. And then we have all these plays ready And then with this account, we're going to sell the Apple. We just got to see what Apple's at. I'm pretty sure it got bought up already, unfortunately. Actually, no, not really. It still got sold off. The thing is, Apple could still... This whole entire market could still drop down a little bit more. It still looks like it wants to drop down more. I'll be honest with all of you. That was one of the main reasons why we got into Apple, was because we think the overall market is going to drop down a little bit more. So that's more of a safe bet, right? I mean, not really safe if it goes against you and you're what's called wrong, but that's what we're thinking. The SPY put, I really want to wait for 585, but I'll be honest with all of you. I'm going to be a little bit not, what do you call it? I'm not going to really be sitting on my hands is what I'm trying to say here. So with that $500 to $600, even if it doesn't open up and it's at 1,000, remember my goal was to sell at 1,000 over here. We went from 200 up here, or $100, then it went up to 200 the next day. And then over here, it was at almost $600. I wanted at least 800 to 1,200. Because looking at the trends, that's exactly what it looked like it could do still. Right now, because you just zapped down again, and because I still have another 20 days of time to this, it's still going to be up a good amount. It's just, I'm not too sure if it's going to be up to 900, 1,000. If it's at 800, I'm instantly getting out, because that was what I wanted the first time. And then what I'm going to do is, if this gap gets filled, I'm going to wait like maybe, call it 3 days, right? So in 3 days of time, I'm most likely going to start, 3 days of time, I'm most likely going to start buying into those puts potentially once more. It just depends, because if SPY holds at 585 or around here, you could definitely run up to 630. So that means any type of puts that we might buy might just get dismantled on the way up. So what I would suggest is that if we do start buying puts, certain levels, certain amounts of capital, certain time we're averaging down. That's it. We're not going to, go wild and buy 10, 20, 30, 100,000 contracts. We'll buy one at a certain time. If it drops 90%, we'll see if we want to buy another 10. I don't really have a maximum in terms of what I'm going to tell you to put into your contract, but I would say you shouldn't really get over 20 contracts. You should average down the first time, which is, let's say I buy something for $100. The next time I'm going to buy that is going to be around $20 to $10. And in all honesty, I would rather wait for $10. So I would probably buy another 10 at $10, which is doubling the position now. So now I'm in for 200, but now my average is going to drop down from 100 straight down to about 25, 20. If I buy it at 10, it will drop to around like 25, 30. Under 50, of course, right? And from that area, you would then wait for another bounce and get out for whatever you can, whether it's another additional $1, $5, $10. Don't be greedy, of course. There's always an opportunity to get the money back. There's always an opportunity, but it's just like if you try too hard and you're not in the moment, you might miss that opportunity, and by the time you connect the dots, it's going to be too late. So, point blank, all I'm trying to say right now is the best idea to play this safe is to sell out of the option that costs $800, right? It went from 100 to 800. Then we're going to buy a cheap call for like $40, $20, because that would instantly go up an insane amount. We'll try to get a 1 day, right? So we'll get a 1 day call for tomorrow, or maybe 2 days, right? Depending on how cheap they are. So we need everybody scouting the 2 days, 3 days. If you find a really good cheap contract, just shoot it in the chat, right? So again, we're scouting contracts for 2 to 3 days out for calls. We want to get in, and when we're inside of these calls, we want to make sure that we're not getting out of them for, a tiny little gain. We want to get something at least substantial, right? Meaning 20%, 10%. Don't just get out for 2%, 5%, right? Get your 20%, lock them in. And if today is anything like this day over here, we should have a ton of entries. I would suggest, though, if you're going to go over $200, $300, wait for 10 o'clock. So again, if you're gonna use more than $200 to $300 on the SPY right now, I would suggest waiting for 10 o'clock. Just put $30, $20. Think about it. If you can get a 20 to 50% gain today, and you do this for 2 weeks in a row, right? You'll be able to easily learn how you could just incrementally add more and more and more to the position so that you're making more and more and more for that idea. What I'm trying to say is that you become better at trading the morning moves because you're trading less money. So it's actually going to teach you how to trade, the 0 days better. So again, everybody, trade with a really low amount. Wait for 10 o'clock, 10:30. Then you'll start to scale it up a little bit more. There's usually some really good entries around 10 to 11 to 11, like 11:10. And yeah, just wait for that, We'll try to see if we could time a nice reversal. Remember, chart number 2, I'm going to have that chart on and this chart. So since we already fell to here, I guess I'll just put this over here. This purple box, or the purple, whatever you want to call it, it's just showing you where this could run to. So let's get everything ready here. I want to have this chart here, and then I want to have this chart like this. Number 2. And then we're simply just going to play the reversals. Now, if this gets out of the range, meaning if SPY moves more than $4, this is going to get out the range. So what we're going to then do at that point is start to look at the supply and demand zone chart. For now, again, we got the zones to the left side. You got the regular charts to the right side. If this holds on the purple line right here at the opening price, I want everybody to buy the calls. So again, if this holds on the purple line here, you're getting into the call side. If it instantly just drops below, again, don't let your heart, go into your you-know-what. Just slow things down. Once it goes below the purple, yes, you may buy a 0-day put for this to fall down to the yellow down here. Truthfully, what I like to do is, if I'm buying calls on top of the purple, I like to play the halfway zone between the next color. So if I play the puts here, I like to play the puts in between the yellow line and the purple. So like somewhere like right here in the middle. So again, if you're playing the puts, your first scalp, you should sell it around here. See if it bounces up. Again, so another put play right around the top of the orange one, if not the purple, for another entry to the downside. And I think that's all, everybody. Whew. That's both charts for you right there. Come on, SPY, just keep dropping it. If it just keeps dropping like this is going to be a really nice entry. We'll get out the puts, get into a nice call. All right. And then remember, I need everybody to scout out the NVIDIA options. Try to see if you could find some NVIDIA options that cost around $70 that expire in 30 to 60 days. You could also find stuff that's like 100 that will be 70 if NVIDIA goes down a little bit more. That's also a good idea. So find something for 70, then find something a little bit more expensive than 70. It's going to drop to 70, right? And what else do we need to look for? Wait for SMCI to drop to 21, 22. Whenever it does, and if you're specifically watching that company, just let me know so that I can look at the charts. What else do we need to look at? Tesla, we're not going to talk about that until we end the YouTube. And that's all. That's everything. All right, everybody, get ready. You think it's a bad time to use the bathroom now? 3, 2, 1, go. Okay, the Apple's up 50%, and then SPY's up a certain amount. I just sold the SPYs. What we're going to do now is we're going to reposition under the purple zone. We're going to sell out of the Apple. We're going to reposition into Apple as well. Right about, it's dropping down a little bit more. All right, right about here. All right, so we got a stop loss on Apple. It just got filled. So again, Apple we're out, SPY we're out, everything we're out. We're completely done out of, not done, but, you know, just sold out of everything right now. The first thing I want to see is the option that we bought for 5 days out, which is now 3 days, is now $14. This is the call side, right? So since this was the call side, the first thing I want to see, ooh, that's cool how it shows it on the screen now. I think that was after the new Webull update. So it shows you the fill price on the screen now. So you can see it. It's on the bottom left if you want to see it, by the way. That's so cool now. Wait, how did I do that? Wait a second. That's actually really nice. Again, once SPY gets above the yellow zone here, don't panic. Don't panic, don't panic. You're good. Once it gets above the yellow, we're going to play the calls to fill some of the gap. We sold out of the puts, so technically right now we're good. It's going up. That was a really good decision so far. Those puts are actually down about, let's check their price. They already fell around $90 in terms of the puts for SPY. So that was an excellent entry. Entry and exit, right? It was about 200% right there. I thought it was going to be about 500, you know, 1,000%. They did it to us again, but it's okay. I have a feeling that as long as we just stay here and we just stay locked in the zone right now, we can get a really nice entry. Remember, you're at the yellow now, so the first thing I'm going to do is I'm going to buy puts here. I apologize for being so late right there. Everything's just a little quick. So again, I'm looking at puts for 0 days. 588 or $49. I didn't get into nothing yet. It's a little expensive. A little expensive. Let's see how much they go up right now in terms of the price for the puts. If, let's just say, we got into it. We would have got a perfect entry right there. We would have been up. But right now, the options are still only at 47, 48. So yeah, we wouldn't have been that up right there. Right there. So again, we did not get into nothing right there. We were going to. We decided to wait a second. I want to see how much the contracts are going up in terms of their price. Basically, the delta. Once I see that for the first 30 minutes, it then gives me more confidence to be able to play 10 to 11 to 12 to 1. So again, that's what I do every single day. You could also do this by putting a cheap amount into the market if you would like. That also works as well, right? If you put like $20, $30, that's a good idea. And then for Apple, I want to see if it's going to hit 210. So let's just say if it continues to crash right now. Remember, I want to see it hit 210. Currently, it's just basically down right here. We had one entry right here, and then we averaged down right up here, all the way at the tippity top. I want to see if this is going to bounce somewhere in the middle here. You know, just slowly start running up like this. So we could get Apple calls here, but it's kind of risky. You could fall to a new low, which is, the 210, 217 low. That's kind of where I want this to drop right now. So we're going to give it a second. We're not going to rush into it. See if this just gets bought up, and then maybe in 2-3 days, we'll be able to buy the puts again. That's what I was trying to say. So what I was trying to say for SPY was, and by the way, everybody, we're long on the euro from right here. So if you're playing the currencies, obviously currencies are getting heavily affected right now because of the tariffs, such as, the Mexican dollar, the peso, as well as the Canadian dollar, right? I have no idea what that's called. Is it called just the Canadian dollar? Whatever. All right, so those markets are getting affected. We got the calls right here. Basically, we're long right now. We're going to hold it until this pops up to about this first target, if not the high. I truly think this can actually run up to around this red area right here. So we're going to wait for that. XRP, everybody, we've been completely correct about this. Everything that XRP has done so far, we've predicted. It even hit the bottom of our range and then got bought up here to the middle point, as you can see. I want to see if it's going to fall to 80 cents. If it falls to 80 cents, you could start buying it. 70, 80 cents. And in all honesty, it's probably going to happen around 2026, but with how fast that just dropped out the sky, I mean, we gotta be careful here. I was going to advise, you know, potentially in the Discord with a little idea. I just had this nice idea that might be able to play out real nicely for XRP, but the idea was just too all over the place. I didn't want to really risk anything. If I'm going to do something with an idea, the first test has to be myself and myself only. And then once I test it, then we can obviously bring everybody else along, right? So again, with NVIDIA, it's time to buy. So I'm looking at my other account now. All right, NVIDIA, come here. Get in my pocket. Let's do this. So I'm looking at options that are for $70. Again, I only want to spend half or double what I spent last time. And how long do I have on my expiration before I even actually buy something? The expiration here is for, I think, March something, if I remember correctly. It was for like March. It was on the TD Ameritrade account. Let's check it real quick. Okay, so this is for, oh no, this is for February. Okay, so this is for February 21st, right before earnings. Which means this play would actually go through earnings. Got that, family? This next play, it would actually be a play through earnings, because earnings is on the 24th. I'm actually looking at something on the 28th, and then we could sell it maybe a week before earnings. Let's look at NVIDIA on the 5-minute real quick. Why do you feel so late? What in the world? Give me 1 second. I'm just writing writing how I want everybody to play this. All right, we posted that. Let's go ahead and look at some of these other names now. SMCI is crashing down a little bit more. That's perfect. Apple's getting bought up more. That's perfect. We'll look at SPY calls right now in a second. It's stuck between a certain range. So, you know what's crazy, everybody? Look at how perfect this was. I just got to stop you for a second. Just look at how amazing this was. Remember, we had drawn this days before this actually had happened, while you were still up in the sky. And you perfectly hit one of our buying points, or our selling points, if you want to call it that, because you're obviously falling down to it, right? And this is not the first time you did it. You actually did it over here as well. Now, you might ask me, my chart is full of a bunch of stuff. This is the first time I've ever seen a chart like this. First time I ever, popped up on the YouTube. What am I looking at? Right? That's a perfect question right there. I got the perfect answer for you. I went ahead and I copied that triangle to another chart, which is much simpler. Right, everybody? It's just this right here. Nothing else. That's it. Just a big old box, which is basically measuring this high, right? 565, and then the last high, 609. And then this box is basically measuring just another set of highs, right? That high and that high. Now, when I zoom into this, that's the top, and the triangle ends here. You might ask, why does the triangle end right here? The reason why the triangle is specifically right here and not here, right? Or up here, or down over here, is because when you create a triangle, I was hitting this high right there, and I wanted that high right there to be a part of it. Why did I want this high to be a part of it? Well, think about it. This high and that low right there, so that low that my cursor's on, and this high, they're kind of like one thing, They're kind of like one trend, right? One leg, and then made another leg going down, and then another leg going up. So my thought process is, if I have one leg right here, and then I have two smaller legs, which is the same idea, right here and right here, and it collapsed right after, right? This should be really good and really helpful in terms of understanding and justifying where the price action is going to go. So all I want to do is hit this high with the top of the line, and this low right here, I want to hit the bottom of the line. So watch this. You see how, if I leave it like this, is it touching the bottom correctly? It's not, right? There's like a little gap right there missing, right? So watch this. When I actually fix it, and then I fix the top, make sure the top looks perfect. You can even zoom in if you want, right? To make sure it's even perfecter. So look, boom, touches that right there. Boom, touches the bottom right there. So what do you notice? It's the funniest thing in the world. This is why I told everybody. We're breaking out, and we had broke out around this time here. And I was like, all right, if you're breaking out right here, I'm just saying, if you snap back in this box, you're going to run to the top and break out as well. How do I know that? Because every single time you have a certain range or a certain wedge in the market, just like this right here, the market, look, hits it, breaks down, right? So what you need to understand is, when is the trend breaking out? When is it basically just holding for it to go right back above the line? And it's kind of hard to be able to tell, but in certain areas and in certain times, certain moments, it's very easy to tell. For instance, you ran up here, you collapse here, you ran up here, you collapse here. So because you kept running up and dropping and running up and dropping, and then look at this. The first drop was really long, right? The second drop, it wasn't that long. The second day it was a pretty good day. So over here, because this actually got shorter than this right here, you see how this is much longer than this? I knew that this was going to be shorter. You get it? So because of you seeing certain things, A and B, it equals C. And the market always does that. Now the funny part is, usually after that entry right there, after C, you might be like, okay, so what if I miss C? Is there going to be a D in terms of A, B, C, D, 1, 2, 3, 4 different entries? And the first thing I'm going to tell you is that usually, no, it's not. It's not going to happen that way. Usually the way that we've been able to time this market is, we see one thing, We see the next thing. We know what's going to be the third thing. And then we got to wait. We need to see the one thing, the second thing, and then the third thing again. First thing, second thing, and then third thing. This is what allows us to actually retain our capital and consistently grow our accounts, because we're not just throwing it into the market for a random idea. We're actually timing the flow, meaning if I buy calls down here, the next time I'm buying calls is either lower down here or a tiny bit above it, like 585 max. So that means you being right here is not really doing nothing. The reason why I sold out of my option, even though I still believe this is going to fall down, is because I know how weird this market is. You could just slightly fill the gap, fill the whole entire gap, and then just crush down. And because of that, I'd rather just take my gain. Right here, it was actually worth more than right here the other day. So because of that, I'm actually making a little bit more money. Plus, throughout the week, because I had that put up here at the top, I had a lot of insurance, so I was never really worried about selling out the puts too early or selling out the calls too early, because I always had that put up here. So while you were running up the whole time, I already made that money back for the option, right? Plus, now I made the money back for the whole entire option, so I sold out. Now we're going to give this a second, see if this is going to drop below that purple or golden zone, and then we'll play the calls, or the puts below it, right, going down. Then we'll play the calls, and that's pretty much all. That's the only thing we got to do at this point, family. So far, everything was perfect. But does everybody see how I use this triangle for here, here, and here? And I knew this was going to potentially be able to hold here, as well as it being right next to that area right now. It does tell you it's holding, but I'm just letting you know, usually when you do this, you're going to break through and go down lower. So I definitely do see this dropping down lower today, potentially to 587. So listen, the second you get below 591, 590, the second you get below this purple zone right here, you must continue to play the puts. Also, everybody, look at those puts right there for SPY. That's perfect. So let's actually see the price. Let's see how much they went up. Because if they went up a good amount... Okay, so they were at... How much were they at? I was looking at the 588s. These dropped to $40, and now they're at $62. So that's up about 50% right there. So a 50% move, just half of the way, half of the route. Because again, what did I tell everybody? The one thing the market loves to do is hit a color and then hit the halfway point. So you hitting the golden one and then now hitting the halfway point in between the golden and purple. How do I know that? Well, visually I can tell, but if I just draw this for you, everybody, you see how the area you just stopped at 5 seconds ago was the midpoint of the golden and the purple zone? That's the one thing I want you to recognize. That's the reason why I tell you to put your stop losses at that point, because you're pretty much guaranteeing certain areas. I usually sell by the quarter point, which the quarter point would actually be half of that halfway point. So where I usually sell my option, it's right there basically. So I would buy in and then instantly sell out. And because I'm using a large position, being up 5-10% with 5K, 2K, 3K, it ends up working out a little bit. It's just, if the move, doesn't occur that quickly, because I am thinking mentally I want to sell out early, there is some areas and some moments where it does lead to some losses. So that's why I don't really play like that too much, especially in the morning. I like to watch the first move, and then once I get the first move, second move, then we can actually start justifying some other plays. Like, for instance, where's the 200 moving average, right? Well, that thing is up in the sky, right? So usually whenever I have everybody trade and I'm teaching them how to trade, the one thing I teach them how to do is how to time and how to understand what the flow is of a company, right? The easiest way to do that is by looking at the 200 moving average. Now, that thing is miles away. So because of that, I'm assuming that today is going to be a type of a day where you're either going to consolidate and go sideways for the... Oh, shit. Just touched something. Where you're just going to go sideways, right? And that might potentially lead you to... You might just like open up like an accordion, which I would assume is the right word, right? Like an accordion, like you might just go up a little bit higher and then go down a little bit lower and then go up a little bit higher and then start choosing a direction. That's like one of the days that we have for today. Once we get 11 o'clock, We'll understand how we can then play the afternoon show. For now, just take it easy, everybody. See if this is going to fall right back down to the purple. Because if it does, of course, watch out. It might just blast right through it. Get something not that expensive, right? Pretty cheap, so that just in case if it goes right back down, you're not just going to be, you know, confused, right? Make sure you always understand that as well. If you can always understand that anything you buy can lead to $0, even if you put it your whole entire account, and you may not like to hear that, right? Full port, full port, full port. I agree with you, right? At certain moments, but we must be realistic here. You know, you can't just do that every single day. You're stressing yourself out. Trust me, I know what that feels like. And every single day, if you're full porting your account, you are stressing yourself out. And it's going to lead you to basically have an explosive day where things are not going to go your way. That's usually what happens with full porting. Usually. Unless you're experienced and you know how to deal with the emotion and you have other accounts bringing in some capital to then justify any losses you're then adding up, then okay, that makes sense. But what I would want you all to do here is just 10-20% of your account into each of these trades. Think about it. If 10% or 20% of your account into that last trade right there, let's just say you got into the trade anyways, because I have a feeling that some of you got into those puts anyways, just because you understand how to play the colors, right? If you got into 20% of your account and it's up 50%, technically now you've made basically around 40% of your account initially, right? We all agree on that. Now watch this. That was from one play. So the first play we had as an idea worked out. This next play, what is the idea? The idea for the next play would be calls at the purple or calls at the orange right down here. And I'm expanding the range. I'm not making it smaller. So we're going to have to obviously just wait a second here and see if this is going to happen. Of course, the first idea would be to play the calls at the midpoint because it's holding right now all the way to the quarter point, which is right up here. But it's not that big of a move. So because the move is so small, whatever it's actually doing right now, I didn't call out, is what I'm trying to say. Because this is the smaller move. What I'm calling out is the move that's going to happen about 2-3 moves from this move, if that makes sense. And you might also ask, how do I know that, right? It's from understanding and watching SPY move for, you know, obviously a year straight, 2 years straight. And yeah, that's pretty much it. That's the easiest way I can explain it, you know? We just stare at this thing so long that when you're looking at the colors, it does a certain thing and it only does that certain thing every time, you know? And that's pretty much it. That's the easiest way for me to say it. So it's not like millions of different types of days and stuff like that. There's only a couple types of days. A couple different types of days, right? And because of that, it allows us to have more confidence in our trades. Think about it. I didn't look up one single report about anything having to do with Trump, right? No tariff news, no none of that. And again, that might sound as a very bad idea, or why am I saying that, right? Why am I telling everybody that I'm not watching news yet I am guiding and helping those trade markets, right? Isn't that kind of bad? And the first thing I would tell you is, ever since I stopped looking at news and events, the performance has skyrocketed. And for some reason, it is not stopping. Every single time we end up bringing a piece of news from an outside source, it ends up ruining everything because of the chaos and the fear that it kind of basically brings. But isn't it kind of funny that the technicals line up with the Trump news? Again, coincidence. I always tell everybody this. The news is always going to line up with the technicals. For some odd reason. I have no idea why. It's like one of the greatest mysteries. But the news, for some reason, always lines up with the technicals. By the way, those puts are up 100% right now. So that is not bad at all. If you're still holding them, put your stop loss, please. We're thinking about playing some calls on top of the purple. But again, we're not going to rush into this because we know this can fall right through the purple. We know that. That's why I told everybody my first main area to buy calls would actually be this orange one down here. But if you're trying to get something cheap, you can get something for like $10, $20 right here, right? That's not a bad idea. We could buy something on our cheap account. Once you fall to the orange one down here, that's when I'm going to start ramping it up a little bit more $40 contracts, $60 contracts, right? At the yellow one down here, that's when I'm going to start buying $200 contracts, $100 contracts, right? I need a drop to this yellow one though. 585 minimum. Remember, that's what I said 2 weeks ago. The market should fall to 585. So that's all I want to see right now. Point blank. That's it. So let's just see how fun this is going to get. Let's see if it's going to crash right through the purple one. And then we'll play some 0-day puts to make up for the other put that we had sold, right? Remember, we bought it for 190, 180. We sold it for 560, almost $600, which is basically what we almost sold it for last time. It was around 530, about 200%. And then the Apple one, we sold it for around 50%. The reason why is because I want to see if I can get a better entry for Apple. So we're going to let Apple lag and basically the rest of the market. I think the rest of the market's going to lag here. I don't think it's going to crash down that much lower. 585 is probably my lowest guess. Anywhere lower than 585, you're going to go to 565, which is a problem because that's the midpoint of this whole entire range. If you break 565, bad things will happen. So, yeah, that's pretty much all. Okay, so we got that. We got that. You're heading up a little bit higher here. We're gonna have some fun with the cheap account here in a second. With the cash account, we're going to start getting into a bunch of entries. Again, I just want to see more confirmation. We got one confirmation or a little bit of confirmation right here when it touched the yellow. But I need a little bit more. A little bit more? A little bit more is what I was trying to say. I sound like Mario for a second. All right. We're going to switch over to a couple charts in a second here. I want to show everybody what's going on here. Because let me tell y'all, it's honestly kind of insane. You know, when I was doing the charts over the weekend, specifically last night on Sunday, and I was noticing that the market had obviously opened up on Webull, I was lining it up with the trading view charts, and across the board, everything was lining up perfectly. And what I mean by that is kind of like these charts right here, right? So look at this. You hit this green circle right here, and now you're stuck underneath this area, which means you might hit this red circle, which also means that my Sonic coins, which also means that the second you get below 585, you could fall to 578, and then all the way down here to 568, which is my main next entry. That's what I'm waiting for this market to drop to. Let's go to the next chart. This chart, let me tell ya, I don't know what to say. It looks kind of ugly right now because of what I did to it. I kind of messed it up a little bit. But let me just put it to the side. And look at how amazing that is. So every single time it kept hitting this line, we kept buying calls. I kid you not. I'm speechless. Last year I've never dealt with this. In 2023, I never dealt with this. In 2022, I never dealt with this. Not even in 2021, when the market was running straight up into the sky, did I see a market do something like this. These are $20 to $14 to $19 moves every single time, and we timed every single one of them. We timed this one, and as you can see, we just kept selling them at the top. The reason why I actually sold this one right here. So the reason why I sold this one was because when you fell from the top, I told everybody, if you run back up and you touch 601 and for whatever reason you get below 601, you're going to drop out the sky again. And I told everybody that over here before you even fell. So then you fell, you ran up, you touched it. We were prepared for it. We knew what to do. We played the puts. It went right back down. Now, because of that, you had a certain wedge that basically was created from the top. If you just go against that line and that line, right? So go on the tops of here and then on the tops of here. And you basically get this entry here. So that's why we knew when to sell out of these puts and when to get out the calls as well. Now, what happened after was you went below it. We thought you were going to crash out the sky. You continued to hold it. You got right back above the red line where we kept saying to buy the calls. We say, I mean, just look at this note right here. Point blank, keep buying the calls at that red line. We bought it here. We bought them here. And today, potentially, we could just buy them right here. We're at the red line right now. So I could see this bouncing right back up to at least this green circle right here. So it's kind of like checkmate, basically, is what I'm trying to tell everybody watching right now. This is literally checkmate. SPY is literally going to run up and fill the gap. And if it does not, once it drops below 590, which is these zones right here that we have prepared, we're just going to play the puts anyways. And look, it's touching that area right now. Did it actually touch it? Almost. It's touching the orange one right now. By the way, again, the orange zones, these are for day trades. These are for the 0 days. Whenever I play 0 days, I like playing from zone to zone, top to bottom. So if I played the bottom of this yellow zone right here, I would usually sell out by the time it hits the bottom of this orange one, if not the next orange one, which is right here where it's getting stuck. And that's basically the reason why I would sell out, because the market tends to get stuck for some odd reason at the midpoint or the bottom of these boxes. I have no idea why, but it's always just happened for the last year, which is why we built a trading style around it. Like these boxes. And yeah. So again, let's look at some more charts here. This chart, you literally fell right into the perfect zone. This one's a little hideous, right? Because we're just drawing lines to time the flow. But no, yeah, you hit this area. Looks like SPY is getting sold off right here. The next thing I want to see is this one right here. You're holding the other wedge, as you can see. If you break below this wedge of 591, you're going to fall to 586, which is my next buying point. Let's go to the next chart. So look at this one right here, right? Once you break through this area, I want to see you fall to the bottom right here. 588, 586. So again, the one thing you're going to start to recognize as I start to switch to all my charts that I've created is that all the levels line up. And some of them actually give you closer levels. So this is 588 instead of 585, right? Which is where I have my arrow to. Go to this chart. This is like another simple wedge chart. I took a line. I went from the highs to different highs, right? And this is what I got. And it's actually listening to it right now. So if it drops below it, it's most likely going to fall to this low down here, which it hasn't fallen to since basically January. So we'll see if it's going to get that low again. I don't think it's going to get that low again. Remember, the only thing I said that the SPY needs to do when it runs up to here to the top was fall back down to 585. It could fall down to 593 and hold, I guess. Yeah. 593 is a stronger level than 585. I would say that, yeah. 100%. So if it holds 593 and gets above it again, we're just going to play the calls again. Got that, family? So again, above 593, calls. You said, when am I live? So I go live every single day, pretty much. Whenever I turn off the YouTube live, I tend to be on the Discord till pretty much nighttime, till I go to sleep. And that's every day. So I don't really have nothing else to do here. I just chart. So if you need help with charting or anything like that, yeah, I'm here every day. Let's see. Let's go to the next chart. We already looked at that one. We looked at that one. Let's get you prepared for more levels for the downside, right? So again, if you fall down here, you're gonna stop at around 586. And if you don't stop at 586, family, the first thing I want you to do is once you hit 586, you're gonna be buying an option that's 16 to 30 days out for at least $100 to $300. You got that? So I'm going to mark it up right here. I just said a 16-day dash. Oh, that's not 30. 30-day call 100 dash $300. Once you hit this low down here, and then what you're going to do is you're going to wait. If it wants to keep dropping, don't be mad. Don't be sad. Allow it to happen. You're then going to buy another set of calls down here, and then potentially also average down on these. The other set that you're going to buy down here, these are going to be for most likely 30 days minimum. And then these down here around 565. I don't know why this actually says 16 days. Maybe I copied it. This is supposed to be around 90 days. And then this one right here would be 30 to 60 days. And yeah, that's pretty much it. Remember, patience, everybody. Patience, patience, patience. It's going to be the most rewarding thing here. You're going to be able to buy an option, go live your life, go do what you got to do, come back a couple hours later, and you're going to be up 500%. It's going to almost feel like magic. But you got to make sure you set it so that it's that way. You understand? If you're trading surface level, which means you're not really digging deep, you're not really having multiple charts, you're not really spending hours on end figuring out what can happen and coming up with different ideas, right? Remember, we come up with hundreds of ideas. And what has happened is over the course of the past year to 3 years, honestly, all the charts that you're watching right now, I built all in the last year. And if I'm being actually more honest, I've built them after June. So all these charts here that you see, they're all built after June. Which is kind of crazy. Because in half a year, honestly, we were so driven and motivated that we've completed the work of, I kid you not, somebody that would have completed this in maybe 10 years, 15 years. And we did this over the course of just 6 months. I mean, we were just doing just this, right? So it's not like we were really going outside or really enjoying ourselves too much last year. And it was because we knew we had some plans and we had some ideas that we needed to figure out. It was just too all over the place. Literally, I would leave my house, and because I would know that there's so much different charts and tools and trading styles that we've been building, it was just all over the place. I couldn't even think. Like, I'm actually being serious here. Like, I could not go out at all for some odd reason. But now it's getting to the point where, I don't even think about it too much because everything is already done. All we got to do is do a little bit of work here, a little bit of work there. And we're ready for the next week, you know? So I'm really enjoying this. I hope everybody else is enjoying this as well, you know? It's pretty nice to see us just be able to do what we're doing right now, you know? So again, we bought into the NVIDIA play. We have about $500 from profit that we've made in this past month that we've assigned to certain leap plays. Now, what we're going to do, ladies and gentlemen, is we're not going to really be buying into too many other leap plays at all. We're going to allow these trades to go for the next week to 2 weeks here and see how they go, see how they do. Once we see how these leap trades go, we'll then potentially add another 500 to 1,000 to more leap plays. We'll do it very slowly so everybody gets into the habit of how to actually correctly, you know, kind of buy into these plays, when to sell, how to fix their charts up. And honestly, that's it. And then for the SPY account, right now we're waiting. I want to see if this is going to hit the purple. This hitting the orange one and then getting bought up right now is telling me that if this runs right back to the yellow, allow it to get to the orange one above the yellow, and then we're going to buy the puts again, which is, again, filling up the gap a little bit more. I think we filled a tiny bit of the gap right here, actually. Yeah, we literally filled like 5-10 cents. That's so funny. No, yeah, you literally did, yeah. Of course they did that. That's so funny. So again, they just filled part of the gap right there, which means, actually, no, they didn't. because the line, I didn't see the red line. Now I can see it. Okay, now I can see the red line. So it's a little bit below it. We'll wait a second here. Remember, this is just so that we're not wasting any capital, you know? We're already up 200% on one play, 50% on one play. There's no need to rush a single thing. The first order of business is, again, calls at the purple, right? For this to bounce up potentially higher. And if this drops below the purple, which most certainly it can. You know what's so funny? Look at how this dropped to the purple one this morning at pre-market. You literally perfectly hit the purple and got bought up. So let's see if it just goes lower than that pre-market low. Remember, we pretty much broke the whole entire week. Every low that we've hit, we've already broken it. The only low that we need to break next is the January 27th low. And then right after that, I believe it was a couple days before that. Yeah, the 15th and 13th, you actually went to 570s. So that's going to be really insane if SPY ends up crashing that low right there. So again, you just hit the purple right now and you're holding. I'm looking at the calls. Calls for 599. Where are we at right now? 591. 599s are $17. 598s are $25. 597s are $36. So again, these options are a little too expensive right now. However, options that were, you know, for the downside, the put side, around this morning were around $40. They ended up going to around $100, $80, which is around 100%. So right here, what we're going to be looking for is another $40 option, which is a 596 option right here. And I want to see if this is going to get bought up. So again, on the bottom right, you could see the fill. Or bottom, is it bottom right or bottom left? Bottom left. All right, let's post this real quick. As you all know, we never play with stop losses, so we don't have a stop loss on this at all. There's no need to have a stop loss when you understand market dynamics and where things can go. If you're wrong, you're wrong. We'll figure out why we're wrong. We'll make the money back. And then we'll see how we're going to continue to play the trend that's currently in effect, right? That's how we do things around here. So again, family, we're going to shut down the YouTube here. We're going to take care of what we got to take care of on the Discord. And if anything, I'll be sure to post something to the community section. So be on the lookout for that if you want to see any more ideas or if I'm going to hop back on today. Other than that, everybody, I'll see you tomorrow, right? Thank you for popping up. Good luck. Remember, you're looking for this to run to the halfway point, yellow point. If you need levels, these are all the levels on my screen right here. You could pause the video or replay the video back to see the levels here. Again, I'll zoom in a little bit more so you can see those too. Puts below these levels, calls above these levels up here. It's as simple as that. All right, family. I'll see you tomorrow. If you want to join up on the Discord, I'll post the link in a second here. And yeah, good luck. All right. Let me do this real quick. Go, go, go. Go, 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 go. It's getting bought up. Hold on, SPY. What are you doing?